All right, everybody. Good morning. We're live. It's about 7:45 a.m. Eastern. A little bit of a later start this morning. I've had a lot to do on the admin side, and I'm still under the weather, so you'll have to bear with me. I'm fighting a pretty nasty cold flu thing here. First cold flu of the winter for the Swedish winter, so that's not too bad. Been very healthy otherwise, but my energy levels are still a little low, and I woke up with a little bit of pink eye in my right eye, so I'm kind of, I'm about one-eyed and very sniffly today. But we're going to crush and fight through anyways, because unless I can't get out of bed, we're not taking a day off. The show must go on. But just bear with me with the energy levels being a little bit subdued. And, we'll see how long the stream goes. Our goal is to patiently wait for the setups, make money, and then call it a day. And don't keep trading and give the money back. That's really important. All right, so we only have about 15 minutes until the first hourly check, so I want to get into that across the major futures markets. Let's see what we've got. We don't need to go into yesterday's trade right now. We can talk about that again later. I posted a summary video on it. A good trade right at the open, short the NASDAQ. And again, it was the strong dollar and bonds tanking, meaning rates rising, that tipped us off to that great spot to get short on NASDAQ futures. Those are the types of trades we're waiting for using Owings market analysis and all the intermarket correlations. So important. I'm going to keep hammering that home. Just as long as I'm here and I've got a platform, I'm going to hammer that home to you guys because it's so important, and I don't really see anybody using it or trading with it, and it gives such an edge along with Owings market analysis. All right, so with all that said, and I've got a special treat for you guys. We're going to go ahead and run our first advertising campaign. We're going after the Furus. It's going to be a lot of fun. I'm really excited about it. Put a little bit of money behind the advertisement campaign just to gauge the interest out there. So we will take a sneak peek at that video that's going to start popping up in people's YouTube feeds here after the 8 a.m. check, once we've got a little bit of time. So we'll do a grand premiere of that first advertising video. It's pretty funny, and I like to do funny stuff because life's too short to be too serious. All right, so we've got the E-mini S&P 500 here, and what we can see, I just got to make sure, one sec, just check my analytics. Checking the analytics here, make sure. Looks like this is the correct stream, I believe. Give me 1 second, you guys. I'm just checking the analytics. Like we are definitely live on the current. Okay, so I think we are live and things are good. I got to do the check. There might be a delay with the software today. Sometimes that happens. It's not really a big deal. Anyways, if anybody's there, Steve, if you're there, let me know. I can get a camera check, mic check, audio, all that stuff. All right, got to jump into the analysis here. So stocks continue to squeeze higher. We can see that here. We got the daily chart for the E-mini S&P 500 here. We've got the weekly chart in the middle, and we've got the hourly chart to the far right. And again, I just want to make sure that my audio is coming through. 1 sec. Yeah, it is. Okay, good. So looking at the E-mini S&P 500 here, we're going to get into all the higher time period analysis in a moment after the 8 a.m. check. We want to see if there are any trades ready for 8 a.m. We take our trades on the hour. We plan them in advance, carefully wait for them, take them on the hourly closes, and we spend the time in between talking about trading, analyzing, and preparing for those checks, right? We're constantly preparing, setting the foundation for the upcoming trade that we may or may not take on the hourly close. Now, when the stock market opens at 9:30, yeah, like yesterday, we took a trade right on the half hour. If we have a news announcement at 8:30 a.m. Eastern, sometimes we'll take a trade on the half hour. But generally speaking, it's on the hour we take the trades, or on the half hour if you got the market open or the news announcements coming out. All right, so the question is, I think stocks are going to continue to squeeze. That's what we said yesterday. That's why we were very careful. We took that one short at the open. That was a great short. I don't think the squeeze is over yet. I do think it's going to be over soon, but we're waiting for it to show some signs of topping out. It's not doing that yet. With that said, I'm certainly not chasing stocks long up here, even though they're squeezing, because we're not seeing confirmation in the bond market, and we're not seeing confirmation in the US dollar that this move to the upside is going to be able to be sustained for stocks. I don't think it's going to be. We'll talk about that more. We talk about it every day. Go check the past streams if you're interested in those correlations. So the question is for 8 a.m., hourly trend run to the upside here. Hourly chart is to the right, 4-hourly chart in the middle, daily chart to the far left. We've got all the other charts on all the other screens. We can talk about those, bring over the volume profile, etc. But for now, we're going to fire through these major markets and make sure we don't miss anything. Because yesterday, I actually missed a crude oil short at the 8 a.m. check because I just wasn't paying attention to crude oil. So, you know, that happens sometimes, and I want to try and not miss good trades when they set up. So, you know, I don't see any reason to go long or short here on the indices right now. We'll check the news calendar here in just a moment as well. Being behind the weather, launching the first ad campaign, just kind of put me a little bit behind schedule this morning, but those are the realities of trading and living life when you're not an influencer hanging out on the beach in your bikini. All right, so NASDAQ, a little bit of a resistance pocket pattern here. I'm not really going to mess with the indices right now because it is 8 a.m. So we will not pay too much attention to the indices until about 9. Let's look at bonds. Yeah, I think bonds, you've got some nice support here. So I think this is why stocks are going to continue to squeeze. And I do think, you know, bonds are probably going to be okay from the long side today. This is the 10-year Treasury note. So we'll just look for, you know, moves down into support. Right now, I don't see anything there. Let's look at the 30-year. So looking at the 30-year here, oh, beautiful, beautiful pattern. We did talk about bonds being supported in the elite members area yesterday. I wrote to all the members and I said, look, I would be very, very careful heading into the close because stocks look like they're probably going to continue to squeeze and bonds look like they're well supported. That ended up being the right call, thankfully, which is nice. It's not always the right call, but it's nice when it is. So bonds here at the 8 o'clock check. No, I'm not interested in doing anything. Let's look at the ultra bonds here. Drink some coffee. I'm going to check my software again because I know we are live here. So I'm streaming. We're on. Yeah, I think everything's pretty good from what I can see. Okay, so what we are looking at here is the ultra bonds. We'll just kind of ease in here. Ultra bonds, yeah, not much that I want to take here. We're going to go into in-depth analysis after the 8 a.m. check. I just want to quickly fire through here and make sure I'm not missing anything like crude oil yesterday. Let's look at gold. Yeah, so gold, yeah, not surprising to see gold pushing higher on the back of stronger bonds, lower rates. Dollars firmly above 109 against the euro on the futures contract. So that's why I do think stocks are going to continue to squeeze. And I'm not against playing stocks from the long side. Certainly not going to take stocks short today under this particular set of circumstances with the intermarket correlation. So not going to short the stocks today, you know, unless something dramatically changes. And even longing, you got to be careful. But right now, the board looks pretty risk on, right? Stocks probably higher, bonds higher, metals higher, dollar weaker. So it looks like more of a risk on, let's get the party started type of day. So that's how we'll trade it as long as the intermarket correlations maintain this risk on tone. So here's gold. You know, gold's still very, very choppy, but I do think we're going to rally today. We don't really have a nice setup on the daily yet. So I'm going to be patient on gold. Let's look at silver. Silver did squeeze yesterday, and you know, that was a decent call. Just not getting caught short down here. We could see that we were coming out of a potential exhaust here on the daily chart for a reversal back up, and now silver is squeezing nicely. So I still think silver is going to be an amazing short. Probably up around. It depends how far it wants to rally, but you know, 23.50 maybe 23. Yeah, somewhere up in there. So we'll keep an eye on silver. Don't want to short here. We know that much. Let's look at copper. And remember, we're just trying to find the best, highest probable, I can't even speak this morning, probability setups, you know, based on Owings market analysis, you know, our volume profile, the intermarket correlations. And these are the realities of trading, right? This is what you have to do to actually trade consistently every day. And this is what I don't see on YouTube, which is why I'm, you know, going after the Furus with a vengeance. So that's going to be fun. All right. So here's the copper chart. Yeah, copper squeezing too. No surprise, like silver. So definitely looking risk on today. Just wait for a pullback in some of these assets for now. Let's look at platinum. You see, so we're handling this transition right now incredibly well, guys. Look how it's like one day risk is on, one day risk is off, one day bonds are going down, and rates are going up, and the dollar's getting strong. The next day, total reversal. This is how you trade. We're using the intermarket correlations and all the different charts in OMA to just kind of navigate our way through these choppy waters and wait and have patience and take the high quality setups that we know we have a good edge on. Those are the ones that are going to make you money consistently over time. And it's incredibly unsexy because we're not sitting here scalping, wasting our time talking all day. We're analyzing and preparing for each upcoming trade. That is the point. So let's look at platinum. Platinum, you've got probably going to squeeze. I think I called this in the beginning of the week that I'm looking for platinum probably to squeeze back up to 940 at least, because platinum is bearish overall. But you got to realize we've dropped from 1,020 roughly down to 900. That's a big drop in platinum. So the fact that we're squeezing higher right now is not unexpected. So platinum, as long as the dollar, any of these I think are going to be decent pullbacks to buy. So again, what we'll do is we'll pick the best one. And well, the best one, according to what we can see. We don't have a crystal ball, obviously, because we're not a social media influencer. But we do have tools at our disposal that allow us to try and pick, the highest probability setups. That's what I mean by the best setup. So crude oil, crude could be the one today. We could get the squeezy deezy through the resistance here. That's an official OMA term, squeezy deezy, up and through the daily resistance now, because risk is on finally. Bonds are bid, rates are down, dollar's weak. The Fed faucet is back open. They're pumping in liquidity, and everybody's counting on these rate cuts in March. Maybe they'll come, maybe they're not. They won't come. I still don't think they're going to. But right now the market is pricing that in, which is why it's rallying. There was some serious buying in the bond market. We saw that supported bonds the other day, which is why rates dropped, and now stocks are loving it. My point with this is that now crude is likely going to love this, because we've been stuck in the doldrums. Crude's been out there in the, the mid-Atlantic, no wind, scorching heat, just sitting in a boat waiting to do something. And now I think that crude is getting ready to launch higher. We've got a lot of support into 73. So here's the daily chart. Any kind of a pullback, we got to keep a close eye on potentially longing crude. And we may not get a pullback. My support level is going to have to be down into 73. We may not get there. If we don't, we don't. But crude should be a good one today from the long side if the scoreboard stays the way it is right now. The intermarket correlations with everything that I just mentioned: strong bonds, lower rates, weak dollar, stocks juicing to the upside, metals juicing. Crude should really take advantage of that, especially with the geopolitical war situation. Now, could crude take a big dump if the Houthis reach out and offer truce? Obviously, that could happen, but I don't think that's going to happen. We don't need to count on that. But we always need to be aware of the black swans that are unexpected, that we don't necessarily see or think of. As Donald Rumsfeld once said, it's the unknown unknowns that you got to be careful for. I think he said that with the Iraq war. The unknown unknowns. Thank you, Donald. All right. So that's pretty much our check for 8 a.m. I'm not seeing anything here that I want to go crazy about, so probably won't be any trade for 8 a.m., which is fine. There rarely is a trade at 8 because I like to ease in. Yesterday would have been one on crude for sure. But I like to ease in. I like to settle in. I like to let the market tell me, the correlations that I'm seeing at the start of the day. Are these correlations valid? Those are the types of things that, I like to kind of settle into as we get set for our trading. So that's really important. All right, so here's natural gas. Natural gas, wow, nice reversal finally off the lows. So natural gas probably going to squeeze now back to the upside. I mean, it's just gotten absolutely torched. No pun intended, torching natural gas. But it looks like we're probably going to squeeze. You got a lot of support down here. Any kind of a big exhaust, maybe down into 2.160 if we were to get lucky and get a big flush down there. Today's a day where I might be willing to go long natural gas if the scoreboard stays the same. All right, so that completes the 8 a.m. check. And we're just going to go ahead and take a quick break. I will be right back. We will premiere the ad we're going to be running, which is going to be very cool. I'm excited about that. And yeah, just want to make sure. Definitely is running. but there's something going on with the stream here. I'm going to just go ahead and check the settings real quick, you guys. So let's see. This is the stream. We are live now. Ask your funded trader challenge. Yes, you should come here and hang around and you'll have a very good chance at passing your funded challenge. And then not only that, once you pass, obviously hang out and get a payout. You know, use the analysis, use the picks. It's going to help you out a lot. All right, so we are streaming on there. That is correct. Connection is good. Yeah, I think everything looks, you know, all right, more or less. I think it was just my OBS software was a little bit confused this morning, but I think let's see here. We're doing all right. Yeah. Okay, good. We appear to be in good technical shape, more or less. All right. So with that said, 8 a.m., no trades. I'm just going to mute the mic, take a 2-second break here, have some coffee, and then I'll be right back and we'll continue. Sorry, I muted a little too soon. We'll continue to prepare for the day. I'll be right back. All right, we're back. Had to get some coffee. I'm severely under the weather today, but the show must go on. And let's go ahead and get the webcam all set again. All right, here we are. We are back. Yeah, so I'm pretty sick today, as I mentioned earlier. So we'll see how long we stream, but we're not going to miss a day unless we can't get out of bed, and it just means I have to drink more coffee. But I will be taking a bit more breaks than usual because I'm very, very tired with this cold flu thing that I got. Some pink eye conjunctivitis in the right eye, but that's what you get during the Swedish winter. All right, so we had hey Steve, how you doing? Did you sleep in? We had a new guest in the stream, SHI170. Glad to have you here, SHI170. I guess let me know if you want me to call you she or whatever you want me to call you. Yeah, so Steve, I don't know if maybe you can rewind the stream and kind of catch up from the beginning, Steve. Nothing going on right now. So once you're caught up, let me know and then we can go over some stuff. And we're going to do a grand premiere of our new advertising campaign, which is going to be very cool. And yeah, I don't know if you caught it. I got a little bit of pink eye today. I'm still not feeling great. I'll be fine, but just, when you got pink eye and you got like, I'm sneezing every 5 seconds, it's not ideal to be in front of the monitor, but the show must go on. So we will do our best and drink a lot of coffee. All right. Yeah, I sent you a on WhatsApp. Try and wake you up. I didn't know if you'd slipped in. Okay, I'm just going to catch up on some analysis here for myself. It's definitely risk on today so far as what it's looking like. Just a recap for you guys. I mean, you can see on the daily, we're making new highs now, historical highs, and we're just probably going to keep squeezing until we stop. But bonds right now, I mean, just to give you an idea of where we're at in terms of the overall risk picture, and the reason I'm not buying this big move to the upside for stocks, I think we're going to squeeze probably the rest of the day, maybe maybe the rest of the week, we'll see. But look at bonds here. Okay, let's look at the 10-year Treasury note. And what we can see with the 10-year Treasury note, I can go ahead and I've got all my higher time period charts over here. But, the only way, here's the weekly chart, right? So if Treasuries now are going to squeeze way up here, and the only way that's going to happen is if there's just a lot of bond buying down here, probably by the Fed or somebody else stepping in. That's a form of QE, right? They step in and buy these bonds, or the notes in this case, when they want to drive rates down, right? So if that's going to happen and somebody's going to buy a massive amount of bonds and notes down here, it's going to drive rates lower. The dollar will get weaker and stocks will continue to juice, right? So for now, that is happening, but I'm still not sold on what I'm seeing on the bond market. I mean, the bond market's going to, really have to rally from here to enable stocks to sustain the move they're having to the upside. Right now, I'm not seeing it. I'm also seeing, there's still strong evidence now that the dollar is probably going to continue to get stronger against the euro. So it's looking like, if you want my honest opinion, based on the charts, I think that this move to the upside of stocks is not going to last. And on top of that, I said my honest opinion, because I'm going to get into, a little bit of conspiracy here. It's not really conspiracy. It's just the way the market works. But they're probably just going to drive, when I say they, I mean the big money, right? Because they have a lot of positions that ultimately they need to book convert those paper profits to actual profits. The only way they can do that is they need a lot of liquidity to unload their positions into. How do they get that liquidity? They generate hype. They push the market to new all-time highs, right? Because when those big players take their, if they stop shorting and start accumulating a little more, they can move this market around, right? So it's pushing it now up into all-time highs, and they need a place to dump all their paper profits, and they'll get retail to come in and provide that liquidity to cash out their own shares, and then retail is left holding the bag. This happens time and again. People always say, oh, you know, the futures markets they're too big, you can't manipulate them. BS. Obviously you can manipulate it. Go back and read, you know, any number of books, you know, where, you know, the original John Pierpont Morgan, all these guys talk about it. You know, go read Reminiscence of a Stock Operator by you know, Edwin Lefevre about Larry Livermore. You know, we don't know if Livermore wrote it or not, but that's a great story. You guys probably have all read that. One of my favorite stories about Wall Street. This game is as old as Wall Street is, and it preys on human nature, right? So in my view, you know, that's what we're seeing right now. You're gonna see a lot of things on the media. Everybody's gonna get so excited. I guarantee you, you know, when I talk to my family, they're all gonna think stocks are, you know, their broker probably told them stocks are going to the moon, right? That's when I know, all right, we're about to head south. Because, and it's true, you know, that old adage about the shoe shine boys in New York, you know, when the investment gurus or the real investment guys, the big boys, when they're getting their shoes shined by the shoe shine boys at the train station, whenever the shoe shine boys started to give them stock tips, they knew they were close to a top. And I think we're seeing something like that right now. And the debt market is also confirming this for right now. So could that change if the 10-year just squeezes big time to the upside and rates really plummet? Yeah, that could change. But until that happens, I'm trading the market that's in front of me. I'm not going to sit here and, you know, chase stocks to the upside. So with that said, it doesn't really matter for us on a day-to-day basis because we're constantly changing the evolving, you know, differences with the intermarket correlations. And those are changing constantly every day and throughout the day. And that's how we're able to pick, you know, high probability setups so consistently using always market analysis and using the intermarket correlations, right? So this is really important. Let's take a look at Bitcoin. Bitcoin, this is also the canary in the coal mine, right? You got the canary inside the cage in the coal mine. The canary is almost out of breath. He's dying from all the toxic fumes coming out of the coal mine, signaling to the coal miners to get the hell out of the mine. Bitcoin is our canary in the coal mine. Look at this, guys. What does Bitcoin represent? Bitcoin represents speculative fever. What do we see on the Bitcoin charts? Well, look at the weekly chart here. And, you know, for you guys, the Bitcoin people, you know, we talked a lot about this. I was preaching till I was blue in the face up here. Don't go long Bitcoin. Don't go long Bitcoin. Get some hate messages. Why do you hate Bitcoin? I don't hate Bitcoin. I'm just looking at the charts and I'm looking at the 10-year treasury note and yields in the dollar. And, you know, I'm telling you not to be long Bitcoin up here, although it's for educational purposes only. So what you can see with Bitcoin here on the weekly chart, you know, the fact that we're probably trying to exit congestion to the downside. I'll start drawing with my tools in a moment. I got to hold my coffee for right now. Get through this with my cold. So on the monthly chart, I mean, look at the quarterly chart here, guys, with Bitcoin. I'll show you the yearly in a sec. This is the quarterly Bitcoin chart, right? In OMA parlance, this is an exhaust, right? If that's an exhaust, what's going to happen is we're probably going to head back down to 28,000 at least, right? Can I give you an example of a similar exhaust? Yes, I can. So here's the Bitcoin exhaust. Let's go ahead and look at something like natural gas, you know, from just last week. Show you what an exhaust looks like. And how does an exhaust happen? We'll get into the mechanics of an exhaust here shortly. This is an exhaust. This is natural gas. See, like just a huge pump, and then boom, we're going to the moon, just kidding, no we're not, and it gets hammered. And the reason it gets hammered is because all the people who got sucked into going long, as this thing turns around hard and fast, they got to bail on their positions. Fresh shorts come in. It accelerates the move to the downside. This is what we're seeing in Bitcoin right now. And the Bitcoin bros in Miami are not liking it. They're not digging it. It's not fun for them. So looking at, you know, does that mean we're not going to have a pop today on Bitcoin? You know, maybe. But because rates are dropping and the dollar is a little weaker. But overall, I think any attempts by this market to rally, whether it's Bitcoin, treasuries, the euro against the dollar, metals, ultimately, I think they're just setting up really good shorts higher up, which is fantastic because it's going to mean we get to go hang out at Short City for several weeks and print money as these things collapse and everybody else keeps buying because they think they're catching the dip that it's buying. No, it's going down. So that's what we're waiting for. I know it's a mouthful, guys, but trading is a mouthful. That's the way trading works. Here we go. Now, let's do our check. Oh, we got to check the news quickly. As I mentioned, I'm a little behind today due to my being under the weather. I could have easily canceled today's stream, but I don't want to do that to you guys, and I don't want to do it to myself, quite frankly, because I make more money standing here trading my account rather than laying in bed being sick. So I'm only going to miss a day if I'm really sick. Right now, I'm just kind of sick. It's kind of one of these lingering thingies. All right, so today at 8:30, unless my clock is off, we don't have anything. No, we don't have anything on at 8:30, but we do have the Bank of Canada interest rate decision at 9:45. Steve, if you can remind me, please. I'm sure I'll probably forget. We've got Bank of Canada important 9:45. That'll move everything, but it'll really move the Canadian dollar. So we want to tap in to the CAD. See if there's any opportunities there for that announcement. And crude, obviously, is going to be affected by the Canadian dollar, the Bank of Canada interest rate decision. So I want to keep an eye on crude heading into the 9 and 10 o'clock closes. And crude looks good today. I think crude, with the risk on, crude could really, really squeeze, which would be awesome. So Bank of Canada could provide the impetus for crude to head to the upside. Then we've got the S&P Global Composite PMI flash at 9:45. That can definitely move the market. I like to trade the bond market for that one, especially the 10-year. I don't usually trade the 10-year. I prefer the ultra bond because of the volatility difference in the ultra bond, but I will trade the 10-year during news announcements sometimes because it's a thicker instrument. So when it does thin out heading into the news announcement, it's still relatively thick. So it's a good one to trade during news. So that's at 9:45. And then we do have the crude oil number at 10:30. So guys, this is a massive day for crude oil. Bank of Canada, PMI flash, crude oil stocks at 10:30. This is going to be a busy day for crude oil. Very busy. You see how by constantly cycling through the major futures markets, it's like, this is why I'm trying to also educate people out there. You don't have to be married to like the NASDAQ or, the bonds. I love the bonds. I was married to the bonds for a while because I love the bonds, but I realize you get the best setups by, number one, looking at the inner market correlations. And then number two, you want to go to where the money's flowing. You want to go to where the opportunities are, and you're not going to be able to do that if you don't follow all the markets, right? So people that just trade only NASDAQ or only whatever else, what that means is you're going to have periods of time where your edge stops working in that market and the tide's going to go out, your shorts are going to be down, and it's not going to be fun. So I recommend looking at a lot more markets. All right, and then we got a 5-year note auction at 1 p.m. That might move the 10 years a little bit and the overall bond market. So a decent day for news, for sure. But we will keep that in mind today. All right, so but 8:30, nothing. We're waiting for the Bank of Canada. And again, I don't trade the Canadian decision that often, so I'm going to have to keep rechecking. Yeah, that's 9:45. So all that's coming in at 9:45. So this market is probably going to be waiting until 9:45 or 10 o'clock to move. So those are the key announcements for the day. Like, oh, but why aren't we scalping the NASDAQ right now? We could be losing millions. I know, you guys, we could be, but we got to calm down, relax, and see what the news is doing today, see what the market correlations are doing, see what our lovely OMA is telling us. And just like every day, I come in with an open mind, try and just not be fixed on my idea of what I think is going to happen. Let the market tell me what's happening with the market correlations, then read my OMA and trade the market that's in front of me rather than the market that I think should be in front of me. It's a subtle but massive distinction that I don't think that many people think about, and it's important to think about, because when you trade the market that you want, that you think what's happening, and you're not trading the objective market in front of you, that's how you run into problems and have mistakes and ultimately lose money and run out of mental capital, which is not a good situation. All right, so for 8:30, no news, right? We do our checks on the hour, as the little scrolling banner across the top says. So, now we use this time to continually look at the different markets, keep an eye on the correlation so we're always up to speed, and check in with the volume profile as well when we're about to take a trade. I use the volume profile, but it's more of a confirming or denying factor if I have everything else in place. So there's a lot that goes into every single trade, and that when you do that, That's why you can have, you know, a decent hit rate and consistency and make money over time. And when you don't do that, you know, you just want to hang out on the beach and trade millions of dollars on your laptop, you know, great for those that can do it. But I don't think that's going to lead to any consistent results. All right. So Steve, are you caught up yet? All right, let's go to, we had a good day yesterday. You know, that was the thing yesterday. The one trade we took, you know, people in the chat made money. People in the chat are passing Apex Trader funding challenges, using this analysis, following the trades. Guys, my goal is to get banned by Apex eventually. Hopefully too many people will just have the same exact trades, passing their funding challenges and then getting payouts on the calls. That Apex just says, look, if you take that guy Andy's calls anymore, we're not going to honor your payout. That's my goal. We'll see if I get there. But if word spreads that all you have to do is come here, pay a little bit of attention and follow the analysis and use the signals, and you can cruise through your Apex challenge and get a payout, I think, you know, we could blow up pretty quickly, which would be very cool. You know, so we'll see what happens there. Bank of Canada. Yeah, exactly. That was what I was just talking about. Thanks, Steve. So you guys want to see, Steve, you want to see the new ad we're going to be running? Are you caught up live? I can show you guys the new ad. Really funny. You got to realize, like, I don't run ads based on what, like, how I think people are going to react. I don't really care how people react. It's more like if I think it's funny and relevant and we'll get a little bit of attention, then I'm going to run the ad. So I structured the ad that way. And I haven't run it yet. Google's in the process of approving that ad, but I can do a premiere for you guys here if you want to see it. Let me know if you want to see it, Steve. Blow my nose while you guys decide. All right, let's try and run a poll. I've never run a poll in here. I got to learn how to use all these tools. Engage with your audience, guy. Start a poll. Let's go. Okay, ask a question. Here, I'm just learning the streaming, guys. Should we watch the new ad? Let's say, should we watch the new ad? Keep it simple. We'll go start poll, give everybody a chance. Hi, I have. They don't like commenting. Okay, we got a 100% rate on the yes, which is fantastic. All right, let's go ahead and watch it. I have to fix the OBS, so I'm gonna take away my volume and I'll put the desktop audio so you guys hopefully can hear it. And if you don't hear it, we'll just run it again, but I'll try it. Okay, hold on.
Meet Brittany, the beach influencer, who's making trading look as easy as a day at the beach. Brittany owes all her trading success to her award-winning sun, sand, and stocks course. Because who needs real skills when you can hang out on the beach, prancing around in your bikini all day? You too can learn all the secrets of the trade with Brittany's exclusive beachside trading signals. Because everyone knows real traders trade millions of dollars on a laptop from the beach. Now, introducing Chad, the redhead with a man-bun, soft-spoken hippie guru who claims to have unlocked all the ancient small-cap trading secrets through long hours of meditation and bong hits inside his classic VW trading van. Finally, let's not forget about Harley, the too cool for school Miami bro. Harley's convinced his fanboys of guaranteed trading riches by cruising around town in his Lambo, flashing his Rolex, and splashing around with all the models at his South Beach pad, because that's just how all the mature, humble, and successful traders are. If you're done with the show-offs and ready for substance, Owings Trading is where it's at. We're certainly not sexy and you won't be a millionaire by next week. Heck, we don't even drive fancy cars or wear ostentatious watches. We do, however, have a unique trading approach that works and delivers consistent results. If you're tired of the influencers and ready for real trading, join us at Owings Trading. Check out our live stream, see the strategies in action, and if you're interested, take our course with the only 100% money back guarantee in the business. Owings Trading. Ballers need not apply.
All right. Did you guys like that? I liked it. I think it's fucking hilarious. Oop, I used the F word. Sorry. I think it's really, really funny. Let me see here. Just got to make sure all my settings are back. I'm not used to like flopping back and forth with stuff here. Let's see. Go back. Oh, I think oh, the webcam needs to get turned on. There we go. Okay. So that's, I find that incredibly funny, and it's going to relate to all the people who have unfortunately been scammed by these, you know, gurus out there. And ultimately, that's what will spread the word about the authenticity of what we're doing here, which is cool. So that was a lot of fun. Thanks, Steve. Yeah, I was going to tell you, you know, being a Mormon, close your eyes the first, you know, 30 seconds or whatever. But you said you guys are human. So I thought, you know, you wouldn't be too offended by Brittany. I had to put her in there, you know. You got to have a little fun in the video, a little, you know, a little spice. So that was good. Yeah, exactly. Well, that's where one of my, you know, master's degrees comes in handy. When I want to get something like that done, I can get it done quickly myself. If I have to pay somebody to do something like that, you know, I'd have to probably spend like, I don't know, $500 or $1,000, and they would take a week or two. You'd have to go back and forth, like, and in the end, it would just suck anyway. So I found it's just easier to do stuff myself, even though I don't really have like that much time. But it's more fun. It's kind of a creative outlet as well to do stuff like that. I do enjoy, you know, it kind of takes the mind off the actual trading sometimes, which is cool. So anyways, that'll be running on Google. You guys will see it. You know, if you see it and you already saw it and you already know me, don't click on it. Save me cost per click money, please. But it'll be running on Google, I guess, starting today. We'll run it for a couple of weeks. I've got another version of the ad as well we can show tomorrow. It's a shorter version, and it features only Brittany. It's a little bit of different text, but it's also pretty funny. Really funny, actually. All right, so you can see stocks are off to the races here. I do think the 4 hourly here, I mean, we're going to want to squeeze up to this extension for, I mean, I don't like to use terms like for sure, you guys, but I mean, this is just a blow off top. And this is how these typical blow off tops work. You see how this thing is just not pulling back at all? This is when people who don't trade and don't follow the markets, like this is the kind, like this is going to get the headlines on, you know, CNBS, right? I call it CNBS, like my buddy Michael Pinto. Not really my buddy, but I like Michael Pinto. You know, MSNBS, all these crappy channels out there. Kramer, right? He's telling the people to buy stuff right before it tanks, so all his buddies can get rich. They need the market to squeeze up like this because it generates the headlines, right? It's not sustainable, and people who don't trade professionally for a living don't realize that it's not sustainable. I mean, I'll get calls from my parents. They're like, yeah, our broker just told us, you know, we should probably be adding to our portfolio up here. I'm like, your broker's retarded. Don't listen to him. I mean, it's incredible. Anyways, this is not sustainable is my point. And we can see that with the bond market. Now, that's what we're seeing right now. Does that mean that that won't change if bonds start to, if massive bond purchases step in here and just, you know, skyrocket bonds and drive rates down? You know, sure, maybe stocks could consolidate these gains up here, but I'm not holding my breath for that. And if it happens, we'll be on top of it because we'll be looking at the scoreboard, and it's not going to be something that catches us off guard. So that's very important. The question is, do you want to buy stocks right here? I mean, not unless you want to gamble. I don't want to gamble, so I'm not buying stocks here. These things can squeeze all they want. You know, if we continue to squeeze the rest of the day and stocks give us a nice pullback into some support, and the intermarket correlations look good, yeah, then maybe we'll buy stocks. But we're certainly not chasing stocks, or at least I'm not chasing stocks. We'll leave that to everybody else. Let's look at the NASDAQ. And just the NASDAQ reminds me, that was just when that trade set up right at the open yesterday. That was just kind of like, when the trade presents itself and all the pieces are in line, that's when you want to take the trade. And that's why, I've learned not to force the issue. I sit here and I just wait, and I don't have a problem not being in the market. And I will tell you guys, that's one thing I'm getting used to with streaming, right? Because I know people want to see trading. Well, I'm not doing this to like entertain people. I mean, we're going to have some fun and do some entertainment stuff, but first and foremost, I got to, trade the way I trade. And that's staying out of the market until the prime opportunities present themselves, right? Because a lot of people think, well, all this analysis is like so boring. Well, this analysis is what enables us to win the money, right? To make the money and to be consistent. It's like if you're an athlete and like, oh, all this training, for the Olympics. I mean, this is just so boring. I'm just not going to do it. Then you're probably not going to win a gold medal or a silver medal. So it's the hard yards that get you to the goal. And in trading, the hard yards is the prep that we do every single hour leading to every potential trading decision. Every time you're going to put that money of yours on the line, right? You got to be sure that it's a good spot to do it. People just like, oh, on my latest challenge account or my latest funding account, I'm just going to willy-nilly throw on 15 contracts. Well, that's great. And I hope you guys who are following these trades can put on big size with your funding challenges and make a lot of money and pass the challenges. But that's not, on a real account, that's not particularly realistic, unless you're sitting on millions of dollars, which I'm not because I'm not a Miami bro. So I like to just be very careful about each trade that I'm taking because I value the money that I have and I don't want to lose it, right? Super important. Oh, an affiliate. Well, I would never get an affiliate link with Apex because I'm pretty sure once word gets out, look, Apex is not going to like somebody like me because if people come in here, enough people come in here and literally just start taking the trades I'm recommending, they're going to pass their Apex challenges very fast. And then they're going to continue to follow the stream and they're going to get payouts. I mean, it'll bankrupt Apex, right? So imagine if we have 100 people in the stream and all 100 have like, 5 or 10 50K accounts. And we make a call like yesterday on the NASDAQ and each person, let's say even with just 5 50K accounts, each person goes 5 contracts. That's 25 contracts per person, right? So take that times 100 people, right? I mean, 2,500 contracts on the NASDAQ, that's going to move that market a little bit. Right. So, I mean, Apex is definitely not going to like somebody like us, Steve, but the traders will. Traders will love us as they should. And we're on the side of the traders, which is why we're doing this. But Apex, I don't think is going to be a huge fan ultimately. So get it while the getting's good from Apex before they shut us down. They're not going to shut us down, but they'll just probably not allow people to take our trades, which is fine. All right. But good idea anyways. Yeah, exactly. I mean, that's the goal is to, once people get their payouts, hopefully some of them will want to actually learn how OMA works when they see how accurate it is. Because, at some point down the road, if I decide to stop doing it or God forbid something happens to me, I get hit by a bus, like if I get hit by a bus, Steve, you're going to be able to still use OMA because you're taking the course, you're learning how to use it. You're going to be able to fish without me. Yesterday, the trade you took on crude oil, Steve, that was awesome, dude. Like you had a great trade. You used OMA, you made money. Like I was up hanging out with my family. I didn't take that trade and you did, and you made money. Like that's so cool. That's the goal. All right. 836. Here's the Dow. I do think we're going to see, I think this is one of these days where it's probably going to be just, unless something changes, just one of these straight up trending days, from start to finish. So for those of you who like to trade only the indices or, scalp the NASDAQ, this, even though I'm waiting for a pullback, you can use this analysis to your advantage by, staying on the long side. Don't step in front of a freight train by going short. Don't fight the long side today. Absolutely not. Do not fight the long side. The euro is at 109.35 against the dollar, meaning the dollar is weak today. Metals are rallying today. Bonds are rallying. If bonds start to rally even a bit more, I mean, that's going to be all the fuel that this market needs to squeeze higher. So you guys play the long side, and I will be playing the long side as well, but I'm waiting for pullbacks. But those who are aggressive, I mean, I know a lot of good traders, for example, like if today looking at the board, you know, I'm pretty convinced stocks are probably going to squeeze the whole day. We'll see what the Bank of Canada does if they throw a wrench in it. But right now, all things being equal, we have a very, very good situation for stocks squeezing the whole day, right? Well, I know a lot of good traders that can be like, oh, if it's probably going to squeeze the whole day, I'll just buy one contract here, and they just leave it and go away. And then, you know, if let's say they're long one contract, the NASDAQ, and then price pulls back later by 50 points, they'll just put another one on. Like, there are some people that are really good at trading like that. I'm not one of those people. I like to pick my spots very carefully, like a sniper, you know, take my trades, make my money, and go back to cash. That's just my personality type. And that's the beauty about trading, is that we can all trade, you know, different styles according to our personality type, as long as you have an edge, right? And we're lucky that OMA gives us an awesome edge. So, you know, that's where this information can help those of you who, even if you don't want to have the patience to sit around and wait for the trades I'm waiting for. Don't use the analysis, trade your account. Like right now, you've got stock squeezing, bonds, you know, look very stable, lower rates, weaker dollar, stronger euro. Crude is going to be the big one. Nat gas, I think, could give some good trades today. I think it's going to be an interesting day, especially when the Bank of Canada and the PMI flash comes out at 9:45. So let's take a look. Because the really important one, and this is what I wrote to you yesterday, Steve, in the elite members area chat at Owings Trading. I wrote to you that because initially I was waiting. I actually did check the 3 p.m. close for stocks, and I thought, hey, if I can get a big exhaust up into resistance on stocks, and bonds are continuing to tank, meaning rates are going higher and the dollar is getting stronger yesterday, then that was a spot I was willing to take a shot at shorting stocks heading into the final hour. But I posted a message in the members area and I said, look, I'm not going to be doing that. I'm going to bed. I'm not taking any more trades. And the reason is because the 10-year treasury here, you can see the daily chart right here on the 10-year. This is from yesterday. Let's make that yellow so you can see it better. We hadn't even punched down to the envelope bottom or the extension down here. So while ultra bonds here, you know, the longer end of the curve was much weaker yesterday. You see how ultras had pushed all the way down here, but then they were sucking back up. I was pretty sure ultras were going to suck back up because the 10-year was not following to the downside, and the euro was regaining some lost ground to the dollar. So that's what told me, hey, don't short stocks. And that was also kind of tipped me off to, if this pattern continues on into today, this is why stocks are going to squeeze, right? So this is how we use all these things together. And it's incredibly important, right? Especially when you can match them up with different key OMA levels and the types of trading and all that good stuff. Let's see. Crude oil and I will take over the channel if you get hit by a snowplow. Okay, that's awesome. I appreciate that, Steve. You like crude oil. He's a good guy. Let's see. Crude oil. Yeah, you take over the channel. I like that. There's crude oil. Nice that you could be here, crude oil. And she 170 says, what do I trade on most days? I mean, we're following the major futures markets right now. I'm not looking at the grains too much just because it's not planting season and, you know, I've got too many other things to think about. But I mean, our trades, you know, we've had trades in, you know, calling them out in ES, NQ. Those are the main ones for the indices. Sometimes the Russell and the Dow. But right now, I'm not really paying that much attention to the Russell and Dow. I'm more interested in ES and NQ. If we put a trade on the bonds, it'll usually be the 30-year or the ultra bonds. If we put a trade on the metals, it's usually silver, copper, or platinum. I mean, sometimes I'll call out a gold trade, but I think you can just get better setups on silver, copper, or platinum. And then we'll trade crude oil. And then natural gas, I haven't traded yet on the channel, but on a day like today, if I see a good setup for potential natural gas play, I'll look at that. So those are the main markets I'm looking at, you know, the indices, the bonds, the metals, the energies. And then I just use the FX market to kind of gauge risk off, risk on sentiment with the relationship with the bonds. That's what we trade here. I'm going to start adding some Bitcoin and some Ethereum. We do some analysis on Bitcoin and Ethereum, but I haven't traded it much in the past myself. So I know a lot of people are interested in that and we can make money on that. So I'll start incorporating that a little bit more as well. But, you know, on average, we probably have, you know, a couple of trades a day, but it's not like the point of the stream is it's not just, okay, waiting and taking the specific ones I'm calling out. That's going to help you a lot. And that's great. You should do that. But it's more about, you know, hopefully you're a trader and you know a little bit about trading already. and you can use this analysis that I'm just constantly going over to help you with your own, you know, whatever strategy you're using, right? Like I want you guys to learn Owings market analysis because quite frankly, it's better than, you know, whatever, like the moving averages and all that kind of crap. But if you're using that stuff and it works for you, great. Use this analysis to help you be on the right side of the market and know where the lowest hanging fruit is. You know, like for example, if let's say, you know, a good short is setting up, you know, in one of the metals, right? Well, I'll be able to look at the scoreboard and get a pretty good idea based on what bonds are doing, what are the indices doing, what's the dollar doing, you know, what's the best metal to short in that instance? Is it silver or is it copper or is it platinum? Like you don't want to be shorting copper if indices are, you know, rising, but you can still get a good short in that case, maybe in platinum or silver. So these are just kind of like the different relationships that structure and influence the decision-making process here. Does that make sense, Shi 170? I hope it does. Let's see what crude oil said. So crude oil, he's got his pulse on the crude oil market like you guys wouldn't believe. He's one of my standout students, and he's just so good at trading. He uses OMA, but he's also just got his finger on the pulse for crude. And he has a comment here, so I would listen to it because he's usually pretty spot on. I listen to him when it comes to crude oil. He says, I could be wrong, but I think reserves will be high this week. He's talking about the crude oil reserves, the number that comes out today at 10:30, and oil will have a nice pullback to short. Okay, that's great. See, his analysis on crude oil, he thinks the reserves are going to be high, right? When that crude oil Energy Department stocks number comes out at 10:30, right? If that comes out and it shows that the stocks are big, right? Reserves have increased, supplies increased, that could knock crude oil back a little bit. Let's look at crude oil so we can talk about this. So if that's what he thinks, he's usually correct. I don't know if he's got some secret contacts in the U.S. Department of Energy. Do you, crude oil? No, I don't think he does. He's just nails crude oil. So here, looking at crude oil, what we can see is that, you know, I'll just show you guys here. This is the quarterly chart on crude oil, right? See, all these things go into the decision-making process, and they're really, really important. These are the pesky details that most people just don't want to pay attention to, but this is what makes a difference and leads to consistency. So the crude oil quarterly chart, right? This is going back the last 1, 2, 3, 4 quarters, right? So this is our most recent quarterly close here at the end of December. So look at, it's in congestion, right? The quarterly chart is in congestion. When we're in congestion on OMA, it means we have rules for that and probably going to cycle back here. So if the quarterly is going to cycle back up here, the only way that's going to happen is if the monthly, you know, gets on its horse and gets going. And what we can see on the monthly here for crude oil is that you've got a beautiful setup down here for turning the corner. I think this monthly is going to head back up to 80. I think we're in the process of doing that. But the only way that can happen is if we look at the weekly is going to have to what? It's going to have to exit congestion up because the weekly is stuck right here between support and resistance, right? What does this mean? You know, we're stuck in this range. Well, how's the monthly going to get up to 80 on the back of that quarterly support? The weekly is going to have to exit to the upside. So what do we see for today? Well, for today, which you can see here to the far left on the main chart, the daily is starting to get into a little bit of a trend run to the upside, signaling we might be on the verge of exiting weekly congestion to the upside, right? So if that happens, this is a ripe recipe right now. Looking at OMA, like, okay, risk on all the crude charts. You know, crude could squeeze like a, you know, like a, I was going to use a bad word, but I won't. You know what I mean? Crude can squeeze, okay? So now a crude oil trader is saying he thinks the stocks are going to come out with more supply. That'd be great, because then what we'll do, just like we do at the stock market open, heading into that crude supply number, we'll look at the OMA hourly, 4-hourly charts, daily chart. I'll pick off some levels and we'll say, okay, we've just got a ton of support coming in at, you know, we'll know when we get there, but let's say, you know, 73.25. Well, then we just watch the number, and sometimes it'll spike down there and you can just see it holding. Boom, you get long and it just fires right back up. You got a very low risk trade. Those are fantastic trades. You can take those on the numbers, you know, the interest rate decisions, non-farm payrolls, crude oil stocks number. The grains I don't do because they're a little wild and I'm not as familiar with the grains, but so that's what we'll do heading into the crude oil number at 10:30. So, and we got Bank of Canada as well at 9:45 with PMI flash. So market. That's I'm saving my powder for those, you know, volatile events, because that's where I want to try and make some money today. So I hope that makes sense. What levels do you like, crude oil trader, right now? I'll know my levels better once we get in, but you know, definitely, I mean, anything down into below yesterday's low right here, anything into this pocket here, this OMA pocket, envelope bottom, you know, the 73s continue to be very strong. And then, you know, if I want to look at the, we want to really dial in here. Here's the crude oil volume profile daily chart. And, you know, so far, this is ultra bonds. Let me switch this. Crude oil. All right, so crude oil will load here. So here's the crude oil volume profile. This is for the daily, right? So each one of these is 1 bar for the daily. And, you know, when we look at this before the announcement, so right now what we can see anyways is that what you'd want to be looking for is say, okay, on the volume profile, these are the things I try and teach you guys in the volume profile playlist, but I understand, like, this stuff is not easy for you guys to learn. I mean, it takes a long time. You got to watch it again and again and again, and then learn how to, you know, connect these pieces live during the day. But what I would be, and a lot of it is anticipation, right? You got to kind of, this is where trading can become a little bit like a chess match or something, right? I don't play chess. I don't pretend to, but I can imagine it's similar strategy. You got to imagine what might happen and then prepare for that scenario, right? What will your opponent do? So back to the volume profile on crude oil. If this volume profile here, let's say after the announcement, the stocks come in, you know, heavier than expected, like crude oil trader thinks, and then it punches down here. What that's going to do is you're going to get this daily bar, right? It'll extend. So now your daily bar might look like this, right? And then if you were to get long at a support area here, what you'd want to see you'd want to see it immediately start sucking back up, and then you'd want to see just very little volume down here. Then you can hold that sucker and it'll go, because it'll confirm on that tail of the volume profile that that was just a stop hunt, you know, on the back of the announcement. And, you know, I do pay a lot of attention to these volume profiles, even though I don't have time to talk about them as much as I'd like to. But so that's how you can use that. And then of course the hourly, here, I'm going to bring something else up for you guys here. And then we'd also want to see what's going on the hourly crude oil volume profile at that time. Right, so all these things are really important, and then we can see as well on one of my other hourly charts here. You know, I'd be looking, you know, so a good one, guys. I'm just going to throw this out there heading into the announcement. Mark this down. You got monthly VWAP, the monthly volume weighted average price for crude oil is right at, I'll give you the exact number, 73.27 right now. Okay, so 73.27 should be a godsend to try and get long crude oil later. If risk stays on, right, we're going to know, because Bank of Canada is coming out at 9:45. The PMI flash number is coming out at 9:45. So let's see. But the crude number is coming out at 10:30. We're already going to have that information from Bank of Canada, from PMI flash. And so if you know, everything still looks risk on, stocks are squeezing, bonds are rallying, rates are dropping, the dollar's weakening against the euro, man, like, I'm going to set an order if that's the case down near 73.27. And again, I'm going to look at the hourly and 4-hourly levels as well. But these are the high probability setups that I'm looking for, where everything says, take this trade. And therefore, if you lose, it's okay, because you at least put your money, you know, in the best spot possible that gave you a high probability setup. So that's the way I like to structure the trades. Anybody got any comments or questions? Go ahead and fire away. Well, we got the 9 a.m. check. Let's just quickly, put your questions, but we can talk after 9 a.m. in 9 minutes, because I want to see if there's any trades. I'm not planning on taking any at 9, but let's continue to check. So here's ES. You know, I'm not shorting or longing that right now. I'm more interested in the bonds and the metals. Crude's going to be, you want to stay away from crude until that announcement. But see, here you can see on the bonds, this is the ultra bond. I think if stocks squeeze, the only way stocks are going to squeeze today is if bonds start, you know, pushing up and through the near high and try and target a high from Monday up here at 127.6, 127.7. So it looks like, you know, see, this is what's really important. You know, we're going to have to get through right here on ultra bonds. We're going to have to get through this level, because we're in daily congestion cycling here. So if that's valid, all this support is going to hold down here. and then it's going to fire this up here today. That needs to happen if stocks want to have one of these, you know, super squeeze rally all day days. Bonds need to get up into that pocket up in here, and the dollar needs to continue weakening against the euro. So that's why it's so important to watch these things. So for 9 a.m., do I see anything on bonds? I mean, my bias today on bonds is definitely the long side. So, you know, now this is how I structure these trades. If my bias right now for bonds today is the long side, well, here's the hourly chart here, right? To the far right. If that's the hourly chart, and that's where I'm making my primary decisions, then of course I'm using the 4-hourly chart as well and all this other stuff we just went over. But on the hourly chart here, okay, well, what kind of trading are we in? Well, we're in congestion, right? Because we're not trending up and we're not trending down. We're congesting, and we have rules for that in OMA. So we're congesting, right? So if I was looking to get long bonds today because of what I'm seeing on the, you know, everything else, the daily chart, would I want to buy the resistance level of the hourly range? No, because I don't want to buy resistance. I want to buy support. So I'd be waiting for bonds to come back down in here somewhere. And again, if that happens, I still look at the scoreboard and everything else. But so that's how I don't have time to go into, like, when I'm flying through these markets and I look at, you know, something like platinum and I go no, and I go to copper and I go no. You know, I'm processing all that. You know, I'm just explaining when I have a moment to explain to you guys how I'm making these decisions. That's how I'm actually making the decisions. And it's kind of like speaking a language. You know, you learn this stuff. For me, I've been around this for a long, long time, and I learned everything from my mentor, and then I took what he had, you know, made it my own, and, you know, made it better for me, and I think better overall. But you got to be around it for a long time, and the best thing is, you know, practice makes not perfect, because nothing's perfect, but practice will lead to competence and consistency. So we're not shorting the ultra bonds right now at 9 a.m. That's the nuts and bolts of that comment right there. Let's look at gold. That's the thing too. I want to make the channel, you know, like, people, it's going to be like, the course is there for people who want to dive in and really learn this. But, you know, for those who want to just watch this channel for a year, you can figure out everything. I mean, you basically have everything here that you need. But if you want to, like, actually really learn how to use it, then yeah, the course is going to be awesome. But it's not like you can't figure it. If you really, what it'll do is it'll save you time. Like, as Steve can attest, like, Steve, you're going through the course now. You're almost done with it for the second time or something. I don't know how far you've gotten through it, and crude oil as well. But it's like, you learn everything way faster because it's like presented to you on a silver platter. But I understand a lot of people can't afford it and stuff like that. And I try to make it cheap, you know, reasonably priced. So, but you can figure everything out here. And that's why I'm teaching during the live stream, because I need to explain these things anyways for myself, because I got to make sure I'm just always firing, right? So I don't make a mistake and I take good trades. But then it's also there to, like, help you guys, you know, figure out and learn something totally different. Because, you know, the reason this looks weird, quote unquote, with the dots and the lines is because, yeah, it's different. We're not using, you know, MACD and, you know, moving averages in the way that the traditional way it's all using. And, you know, that was where my mentor really gave me a good, you know, a good tip off to all this stuff. And I can't use his name because, you know, there are laws around, like, you can't, like, use a celebrity's name to get an endorsement, right? So that's why I don't use his name, if you guys are wondering. But you could probably figure it out. And, you know, the guy is legitly worth 9 figures. So, and he's really old now. So, and it's verified in books, you know, been a lot of books written about him and stuff like that, but he's a very private guy. All right. So this is gold for 8:55. We got 9 a.m. Here's the hourly. Gold, the same thing. I would expect gold to rally today. So then therefore it's the same as bonds. You can see how these assets are connected. Do I want to short here? No, I don't want to short there. Look at silver. Yeah, silver really squeezing nicely today. Okay, so silver, this is going to be interesting. See, we're right at monthly VWAP for silver. I'm not going to short it because of what I see in the dollar. Yeah, look, I mean, the euro is at 109.48 right now against the dollar. So I have a policy where, you know, depending on the regime we're in, but right now the metals are really affected by, you know, strong, weak dollar. So even though we're at monthly VWAP for silver, and sure, you got some temporary resistance up here and you could short it. No way in hell would I short it, because again, what are bonds doing now? What's the dollar doing? I don't want to short, you know, silver under that environment. But I'm hoping the monthly VWAP and all this resistance up here could knock silver maybe back down to 22.65 or something later in the day. Could set up a great buy, right? So this is how we just plan trades out and then let the market come to us. We're not going to do anything for silver there. Let's look at copper. Yeah, and that's the number one thing I'm always going to repeat. Steve knows it well. It's not about the money you make. It's about the money you don't lose. That is 99% of trading. If you can, you know, not get stuck stepping on the landmines, then you're, you know, and you have something that works, you'll do okay, right? So, and it's so funny how people just totally lose track of like everybody out there in YouTube land, at least the things you see. It's like, if you're not making, you know, $47,000 a trade, you're a loser. It's like, dude, people need to get back to fucking reality. No offense. Insane. Do people realize like how good you can live on 10, 20 grand a month? I mean, unless you want to go get all the Lambos and all that crap, but knock yourself out. I already went through that phase many years ago. And, you know, once you have it and you go through it and it doesn't do anything for you, it's meaningless. So anyways, copper. See, copper, same thing. We're pretty overextended right now, but I do think copper could continue to squeeze. Because a lot of people are off sides right now. This thing is squeezing higher than people thought. And, you know, we're not off sides, which is awesome. Well, rarely, I mean, I will get caught off sides sometimes, but it's when I get hammered by, you know, an unexpected event, right? All I can do is use the information in front of me. But if I'm in a trade and, you know, some country launches a missile at somebody else, yeah, doesn't matter how good your analysis is, you're at the mercy of God at that point, you know? So looking at copper here, I don't want to short. I'm just kind of hoping these resistance patterns we're seeing across the metals and bonds maybe knock them back a little so we get a chance to maybe get long later. Other than that, we got the stock market open coming at 9:30, so we'll see if there's anything going on for that. Platinum, I'm not going to be interested in up here. Crude's already rallying. Yeah, I mean, we'll just have to see where it is heading into that announcement. But hopefully crude oil traders right and they'll knock it back. That would be awesome. All right, so there's 9 o'clock. I'm not doing anything. Nothing's screaming out at me. You guys eat your hearts out, whatever you want to do, but that's my analysis. I just gave you guys a whole lot there, I think. All right, so let me know if you guys have any questions or anything like that. If not, we can, you know, pause for 10 or 15 minutes and then come back and prepare for the stock market open at 9:30. But I'll hang out if you guys have any questions right now. Checking some stuff on my email while you guys think about any questions. I'm waiting for approval from Google on my ad. That'll be pretty cool. That's why I'm tired today too, because I'm sick and I had to spend all morning working on setting, you know, not to mention the creative, but it's a lot that goes into that stuff, you know. You gotta, and I actually wrote that. I asked ChatGPT for some ideas, but they weren't very good, so I had to script it, and then you got to get the B-roll footage and the music and edit it, and you know, then you got to set up the ad campaign. I mean, it's a lot that goes into it, but it's fun. We're just checking here again. Just checking my Google ads. Okay, so the ad is in policy review at Google, which means they're just checking stuff out. So cool. So we'll see. Very fun. All right. Ugh. All right, guys, let's take yeah, exactly. Don't rely on mercy of God's trades, says Steven. Yeah, exactly. Unless what's your guys's? It's not God, but what's the guy who founded Mormonism? It's Joseph something, right? I can't remember his last name. I can't believe I can't remember his last name. Was it Mormon? Was it Joseph Mormon? Feels like it's not Joseph Mormon. Anyways, we can pray to him when we're in a position and we don't want a black swan event to hammer us. Okay, I got to look more into the Mormons. Now, when I think of, like, you know, the Quakers, the Mennonites, the Amish, I mean, I know the Mormons are not that, but it's kind of closer to that than like typical, you know, Christianity stuff, right? Is that right, Steve? Crude oil trader, are you listening right now? Just type a Y if you are, then I can answer your question from the private message. Then I don't have to type it. In terms of where I got everything, how I put it together. Will the ad be on just YouTube? Yeah, it'll just be on YouTube. It's going through the Google video ads, and then, you know, it's going to target you know, traders and people looking at prop firm videos and looking at specific channels. So it's a very targeted ad. You can see that it's sponsored, and I made it so, you know, you can set them up to make them non-clickable. I hate when people do that. So like, I set my ad up so like, if people don't want to watch it, they can just click, you know, don't want to watch. Hopefully they do that like within the first 5 seconds, then I don't get charged for it. But yeah, so it'll just be on YouTube, Steve. All right, guys, let's take I want to talk about Joseph Mormon when we get back, Steve, because I was just curious about him. But in crude oil trader, I'll answer your question about how I did all that. We can talk about that later. But yeah, guys, give me let's take, it's 9:05. Let's take 15. You know, maybe Steve, you got to go eat some breakfast or whatever. But leave the stream running. I'll leave it all running. I'm going to take 15, and we'll prepare for the open of the stock market when we resume. Right? That'll be good. Those are dancing Wolf of Wall Street. Like that. All right, guys, we're taking a break. Be back in, I don't know, 10, 15. All right, we're back. We're back. Go ahead and there we go. 8-minute break is over. All right, so we've got the stock market opening here. A few minutes. Take a look at ES. It is 9:20 a.m. Eastern here shortly. About 15 seconds. So ES, yeah, just squeeze. I think the squeeze will continue, but there's a lot of volatility up here too, you know, because it's dangerous territory, so you got to be very careful. Yeah, of course, Steve. Yeah, that's good that you're monitoring that. Yeah, I think that's pretty much. I mean, if you're a good short-term trader, I just don't like short-term trading, but you know, like scalping, like super scalping. I'll scalp sometimes while I'm waiting for something, but I mean, like to sit there and scalp all day. But I think today, as long as the euro's getting strong against the dollar, we're above 109.50 now. Bonds, if they continue to push higher, the squeeze is just going to continue, I think. So people can definitely benefit. By the way, I'm coming through right on the webcam and the mic. I think my feed is just delayed, but I think I'm coming through all right. All right. So the question is, you know, is there any place we'd want to try and get long today or take advantage of anything? Looks good. Okay, cool. Not so sure looks good, but at least the equipment is looking good. Great. Just kidding. I know what you mean. Gotta have a little fun, and I gotta amuse myself while we're doing this. It does make it more fun and makes the day go by faster, and streaming does make it more fun. I do like it for that reason. So it's a lot more tiring though. I think that's why I got sick, but I just got to get used to it. So, you know, heading into the stock market open, that's why yesterday, Steve, we nailed that short on the NASDAQ, because here's the NASDAQ yesterday here. Why do we keep going over things? Well, we keep going over things. I'm not saying you, Steve, but people always ask, like, why do we have to keep talking about this? Why can't you just make me money? It's like, well, I'm reviewing because this is how we make money. We review. So here was the hourly close here heading into, this was the 9 a.m. hourly close. And because of what I could see with OMA here, that's why we went short here and took profit down here at the open. So it's key to understand if we have anything interesting heading into the open. I would say yes, we do. Today on the NASDAQ, we have a very nice, you know, support pattern here on the hourly on the NASDAQ, and we are trending up strongly. The 4 hourly is obviously just super consistent trend run. So we're right at this extension. You got to be careful here. But what are we gunning for, Steve? 17,776. Almost the Independence Day. We're almost there. No, are we through it? No, we're not there yet. 17,685. So I do think we're going to gun for that today potentially, because that is the yearly. Andy, where do we get these numbers? Well, I don't just pull them out of my rear. It's right here. That is the yearly NASDAQ chart. Each bar is a year. That trend line right there is 17,776. And I think we're probably going to gun for that today. And for those of you holding long, if you're long and price hits 17.76 and then gets smacked down by 50 points immediately, you know, don't get too freaked out. It's just the, you know, OMA yearly trend line there. So just maybe might want to write that down. It's like in that movie Dumb and Dumber, remember, with the IOUs. He's like, this is one's for a car. It's 275,000. Might want to keep that one. Might want to write that down. All right, so back to the NASDAQ at the open. Got a little fly here, because that's the one we're going to focus on. So for the open, I think we got some room to go. Even though we're at the daily extension, I'm not too concerned about that right now. I think it will break. We're going to go for 1776 either today or tomorrow. It just depends. Yeah, God bless America price, 1776 trend line. It's really funny that it happens to be literally right there. All right, so I do think that daily is going to break for now. That yearly is right up here. We could go for that today because that's the extension of the extent. Yeah, I think we're gonna gun for that 1776 level. We'll see tomorrow for sure, but today it looks like the pieces are in place unless the Bank of Canada comes out and shocks and all that stuff. We'll know when that happens. So right here on the 4 hourly, we've got a lot of support coming in there just below 660. On the daily, we've got the broken near high coming in at 625. I don't think we're going to get back there. Just getting some levels for a 660 looks to be so far. So now on the hourly, let's just bring this up here. Okay, on the hourly chart, you know, I think we'll see what happens, but certainly these lows here, we've got a nice extension down there. If they want to try and dump price down here, it could be a spot to potentially buy, and you know, then it'll close back up here like this. This is a potential. This is back to me imagining what the bar might look like, right? So if they were, or they might just spike it off the close. I mean, but I'm not going to long here because, see, I always try and pick my spot for the best risk to reward. So where I'm going to be looking to get long the open, and I am going to be looking to get long the open, you guys. So just like yesterday, you know, Steve and a couple other people, you can take advantage of this. Like, I don't have time. This is one of the, on the half hourly trades, I don't have time to like tell you, you know, take your hand and give you the exact number. I'm giving you the analysis heading into the open because it moves so fast on the NASDAQ, right? But I'm looking at this support level right here at about, you know, those lows from a couple hours ago, you know, call it 645, 650, anywhere in here, right? Because for me, I've got a really nice extension right there, that pink dot. That's that exact price, you know, is coming in at, you know, 40 just below the lows. So that's a spot for me where I would have, you know, some pretty good, a good spot, like a line in the sand just below those lows. You know, why would they want to drive it in just below those lows? Well, there's a lot of stops sitting there, right? And they want to free up that liquidity. So all those stops sitting there, you know, if there are a lot of stops there, they will go get them. So where do I want to enter? Where I see good OMA levels. If I can see I'm in line with, you know, bonds, the dollar, you know, I'm putting it all together. Doesn't mean it always works, but we have a high probability when, you know, when price gets to our spot. So for today, my spot where I'm willing potentially take a little bit of risk is down there at that support level 17.6, you know, 45-ish on the NASDAQ. And let's say if it spiked down there, because you can also see, you guys, look at your charts. Like you can see when it gets there, you know, what's going on, right? So for me, if it was to get there and I was to buy, and I'll tell you if I buy, like I did yesterday, like I do every day, you know, that general area right there has got the hold, right? That's the line in the sand. That's why I like those levels, right? Now, with that said, you know, it could just open and blast up. It's like, oh, but why? We were bullish. Why didn't we go long? Yeah, because where are you going to put your stop? That's gambling. We're not here to gamble. Would be stop run. Yeah, exactly. That's the stop run that I'm thinking about, Steve, down there. So I don't know if it's going to get there, but certainly anywhere down in there is going to be a potentially decent spot to get long. And that's what I'm going to be looking for at the open. And the open, there's a little, I can give you guys, obviously, you know, great reads and good levels and the direction, which I do every day. But it's not like our typical hourly close trade where like we're planning it into the hour. And I'm like, okay, we're going to sell platinum at this exact number. Here's what I'm doing. When I have time to do that, I do that. But for the open, you guys have a lot of good information here. This is kind of the same information I gave you yesterday heading to the open. And for those with, you know, like Steve, you know, just take advantage and, you know, pass your Apex challenge or 3 of them or 4. You should buy 3 more of those, Steve, today. Just pass 3 more. And then you can do a video for the channel and be like, I've passed my last 17 Apex challenges on this stream that nobody knows about. Oh, God. I'm having fun. Guys, it's also, there's a lot of, I'm just joking, or I'm not joking in terms of how we are good here. We are, but we still got to have humility and all that good stuff. And it doesn't mean we don't have losses. We do have losses. So don't think that, you know, we don't have losses. We absolutely have losses. trying to just, you know, keep them small when we can, and you know, manage our risk. That's what it's all about. So just keep that in mind. I mean, I'll quite honestly here, I'll be surprised if it pulls back here. I think it's just too strong. But let's see what happens. I know where I'm willing to get long, which is down there where I told you guys. So latency check, I've got 9:29 and 30 seconds right now. Exactly, Steve. You can do the TikTok video. I made $17 million today. Okay, we've got 15 seconds. Yeah, we're already pushing higher. So something tells me we're not going to get the pullback today, which is fine. I'm not chasing it. But all right, 2 seconds. Open. So we're open. I'm watching and I'm waiting and I'm singing and I'm dancing. Yeah, we don't have too much latency, Steve. Maybe we've got about 4 seconds or something. Not too bad. At some point, I'll set up a 0 latency stream, but that's down the road. You got to ask who's trapped. I think right now the shorts are more trapped overall, like the longer term shorts. That's why I'll be surprised if they can push it back down to those lows at 650. But if they can, that would just be a blessing. And again, if we get down there, you guys, you know, I'll let you know when if I take a trade. But when it gets there, if it gets there, I also look and see, you know, what's going on. I don't think we're going to get there because I think the shorts are the more trapped side right now. I think the last few days, Steve, you know, since we've really been calling out what's going to happen at the stock market open, we've been pretty, you know, it's been pretty spot on. So we got the euro hanging strong against the dollar, 0.954 on the futures. The silver is up above 23. I'm going to take a quick look here. I want to see what bonds are doing. Bonds holding up nicely. Look at gold and silver. Gold dumping a little bit. Silver holding up nicely. That's good for stocks. Dollar holding up nicely. Silver at 23. Yeah. So if we were to, we're trying to get down there, 670. We are running into the daily extension up here, so just keep an eye on that. But I think there's a lot of support down here. Let's see. Could be one of those outside bars that, if it fishes down here, you know, tries to get back up in here. That's kind of what I'm looking for. I'm just watching and waiting, you guys. The only thing against this trade is the fact that the daily extension is there, but I don't think it's enough to keep me from taking it if we get down here. But I'll let you know. I like that support. They're trying to get it down there, and all the longs who bought up here are doing little poopy doopies in their pants. Like, uh-oh, how low is this gonna go? Oh, that's why it's just, you know, nice to try and just being on the wrong side of trade sucks. And I know from obviously immense personal experience, the only way you learn is by just getting punched in the face many times. So euro, yeah, hanging above 109.50. Silver's right about 23. Bonds are hanging tight. So just waiting. Steve, what's your latency at now? Oh, nice crude oil. Made a little money there. Sweet. Good job. Did you see a key OMA level? Or that was pretty daring of you to go short against all this strength today. But you are the crude oil maestro. So I got to give you that. Yeah, they're trying to squeeze the longs now, which would be great. And then if they could go down and squeeze the, you know, take out some stops and freak everybody out, that'd be a good spot to get long down there. All right, I gotta pay attention. What's the latency at, Steve? Right now I've got 9:34 and 35 seconds. And right now I've got 9:34 and 45 seconds. So yeah, I'm going to be looking at about 40 is my key number that's jumping out at me. 40 is kind of what I'm very interested in. The daily near. Oh, that was a pretty big. I'm going to watch it. I'm not doing it yet. I'm keeping a close eye. I'm just going to keep watching for right now because that was a big, you saw some big selling right there. So let's just see what happens. Okay, that's good. First test held up a little bit. We didn't get to 40 anyways, but because some big selling came in and it got held up temporarily. You know what? I don't think I'm gonna take this, you guys. I don't think it's a horrible trade, but it's not as clear as yesterday. And I think that there's a risk we could, you know, head a bit lower because we are coming out of that daily extension. So I don't think it's a horrible place, but I'm going to watch. So you guys have my, what I'm doing there. Yeah, exactly. I'm just going to keep an eye on this because they might want to run this all the way back down to 17.6 now that I see the price action a little bit. So just to be clear, it's not like yesterday where I told you, like today I'm telling you, I'm just watching, I'm not doing anything. If I do anything, I'll let you know. It just looks to me like coming out of that, see that OMA daily extension held really nicely, 17,680. There's a lot of support there. But one thing that occurs to me on this, it's almost like, you know, I would have liked this trade better had we just opened and gone straight down. The fact that we went higher, took out the highs, and now we're reversing back down to the lows. Not that these lows won't hold down here. They might, but you know, you got a little bit more fuel to head potentially a little lower because if the lower they can drive it, the more the longs are going to shit their pants. That's, you know, if you wondered, well, why am I just being a little more careful? That's why the daily extension on OMA and the fact that they managed to take out those highs and then reverse it. With that said, there's still a decent, you know, probability that support will be strong there, but I'm just careful. You get it's always tough when you're up around all-time highs, you know. Yeah, exactly. But I still think that it's going to still be strong, Steve. The resistance, I mean. Sorry, it's the market, as long as the dollar and the bonds continue to push higher. Euro higher against the dollar, bonds higher, rates down. You know, I think this market is still, it's not done squeezing, but we are, you know, I'm not going to play games up here. I'm going to be very, very careful. You can see that initial level there at those lows is holding for now. But I'm not, just to be clear, I'm not taking anything. It may work, it may not. You know, if I see one thing I don't like, you guys know me, I just don't take it. Because in the end, I know that serves me, you know, out of 10 trades, I'm better served when I follow what I'm feeling while I'm analyzing. And there's something about this that it's not like, I'm not feeling like the impulse to get in the trade. I want to let this settle and see what happens because they could take it way down here, you know, to 17,620. Yeah, exactly. Oh, guys, we got PMI, of course. Here you go. We got PMI flash at 9:45 and Bank of Canada at 9:45. So we're going to have some crazy volatility here in about 7 minutes, which is going to be cool. So let's get ready for that. You know, we could, I'll tell you what, you know, if we were to go all the way back down here below this low on the 4 hourly, 17,620 into this live pocket on the 4-hourly. 17.6. That would be nice. So yeah, there's some support here. It's holding so far. You know, you can see we don't get bad levels, obviously, but I'm not buying it for the reasons I just outlined. I'm okay to wait. If it goes up and I miss it, I miss it. But I think the risk right now is that we test lower before we stabilize and push higher. And we got PMI and Bank of Canada coming out, so that's why I'm going to wait. Let's take a look at the scoreboard. Let's do some stretching. Dude, crude oil trader, you are awesome. I mean, this guy he's unbelievable. He's the one trader I know that, like, if a market is just screaming to the upside, he can still find places to short it and make money. Short, make money. I mean, he's just amazing. So let's see if my, you know, the way I felt about this trade, let's see what happens to this support level. I said I didn't like it, you know, based on what we're seeing. Usually it's, you know, it's like patience is a good thing. And it's usually, you know, people's boredom. That's like, no, you know, what if, or it's not boredom, it's FOMO, right? It's like, well, what if what if it stabilizes here and goes up without me? See, I don't really have those feelings. I don't care. It can do whatever it wants. All right, we got 5 minutes. Yeah, you're at work. Okay, cool. Yeah, nice trade though, crude oil. Proud of you, man. All right, let's look at, we know what NQ is doing here heading into PMI Flash and Bank of Canada. Let's look at the 10-year. So the 10-year is looking nice and strong so far. So this is good. I think NASDAQ will stay bullish if the 10-year can stay up here. But, you know, these interest rate decisions can, you know, some surprise comes out, it can change the entire landscape. So we got to be aware of that. But right now, the 10-year is looking strong. Rates nice and down. This is going to continue to be good support for the NASDAQ. Let's look at the Ultra Bond. I think it's going to be the same. Yeah, the NASDAQ held that 40 level on the first attempt, but I'm still not. With PMI and BOC, I'm fine not being in. Ultra bonds, I imagine, are probably going to catch up to the 10-year. But again, let's see, Bank of Canada. I'm just doing a quick checking the scoreboard, guys, before Bank of Canada and PMI comes out. So gold continues to be choppy. Silver, yeah. So look, silver's backing off a little bit heading into the announcement. 22.93. Off about 10 cents from the high. Crude, we got the stocks coming up at 10:30, but we'll deal with that. Right now, we're still focused on the opening stock market volatility and the Bank of Canada decision in PMI. So crude's just rifling. Nice, as expected. Dollar, here we'll look at Euro, US, stable. We'll get a good read when we look at the Canadian dollar here in a moment. And I forget how the Bank of Canada does it. I think they just kind of release a statement, right? They don't do a press conference. So the euro's looking nice and strong here against the dollar. We are really pushing higher. So this is a recipe that the squeeze will continue on the NASDAQ. Looks like my initial level so far was pretty good, but I don't regret anything because with that PMI and BOC coming out, I'm just gonna be a little patient. Let's look at CAD. What do we have here? I'm going to look at the CAD. These are the Canadian dollar futures. You've got a pretty strong weekly pattern potentially on this, but you got, wow, the CAD, the monthly chart and the quarterly chart. I think the dollar is going to get stronger against the CAD over the next couple of months. That doesn't mean we're not going to rally this week. Yeah, I mean, right now, dollar weak against CAD as well. So if this is any indication, then you know, stocks should continue to head higher. Let's see. So yeah, crude oil. What do you think? We need some comments here from our Canadian counterparts. Oh, that's nice of you to say. Thank you, man. Appreciate it. So you could see, okay, yeah. Because we got boots on the ground there in Canada. Crude oil says, I could see Canada with surprise interest rate rise. Okay, that'd be interesting. Yeah, I think I think CL is going to keep pushing. We got to wait for the inventories on CL. Let's turn our attention back to NQ. I'm not going to do anything heading into this announcement, you guys, because I want to see what the Bank of Canada does, and there's just no stress. But I could see evidence potentially here on the 4-hourly that we want to go back down here and test closer to 17,600 on the NASDAQ. I'm not saying that's going to happen, but up here just looks a little too frothy for me to want to buy here, which is why even though my initial level is holding, I mean, you can see these levels, guys. I mean, look at this. We had our extension here before it got there, and it held. It's nice, but I still, I'm comfortable right now being flat. All right, we got BOC in 15 seconds and PMI flash. It's going to be a big one. I would recommend everybody be careful. Not good to hold positions heading into these announcements. I am flat. 5 seconds. So crude oil says inflation not slowing down as planned. Okay, interesting. Let me know if you guys see the what the Bank of Canada did. I don't have time to look right now. Interesting. Let's look at bonds. Yeah, but that's because you're the scalping maestro, crude oil trader. You're so good at that. Okay, so here's, you see bonds are pretty wild. Gotta let them settle here. See what the Bank of Canada did. Let's look at oh wow, the dollar, a little bit of a rally against the euro. We'll check the CAD here in a second. Here's UB. Let this market settle. Let's look at the CAD. The CAD will tell us what the Bank of Canada did. So I don't know, kind of choppy. Check the news announcement here, you guys. See if got it. Nope, they kept it steady. So that's liquidity spigot. So they kept it steady, and the PMI flash was 52 versus 50. Manufacturing 50, so that's better. Services PMI 53 versus, so PMI coming in a little bit. I don't see anything crazy. Looks like the day, according to the news, the day will just continue kind of the way it started, but we'll see how the scoreboard develops. Because we got the 10 o'clock check now coming up, so this is, you know, hopefully there'll be something to trade. Let's see. All right, we're going to do our check and prepare. At ES. I just look at the daily FX calendar. It's dailyfx.com. I've just been looking at it for so many years that it seems to do a good job of giving me all the announcements, which is nice. So here's ES. My data's pretty, everything's a little slow at the moment. Somebody, Steve, do you want to give me a check on price here? Is your ES at 49.17? more or less. I think I didn't buy a new computer this weekend because my computer's all right. It's just when the market opens and I'm taking in so much data with the volume profiles and everything, so I think it gets a little slow and then kind of has to regroup. But if that keeps happening, I guess I'll have to get I already have so much RAM, but we'll see. My computer's not too hot. 49.15, yeah, so you got pretty similar there. 49.16, yeah, we're hanging out in the right area. Okay. So let's just see what we got shaken the 10 o'clock hour. Yeah. And you got a lot of support down here on indices. Bonds, we'll see where these close, but looking at 10-year. Oh, this is interesting this is interesting. Look at the 10-year going from, that's a big move right there in the 10-year. Big move. See, this is the kind of things, you guys, this changes the, this is a big move right here. I love when stuff like this happens. So here's the hourly on the 10-year. You can see, depending where you have a ton of support here. This level needs to hold, or I think the party in stocks is going to be, yeah, there's a big drop on UB as well. We're going to check that. This is key. This is why the scoreboard changes. So I think UB, you've got a lot of support down here. I don't know if I would buy that, but I'm kind of interested in it down here. I want to see what the metals are telling us. Choppy waters. Gold's got a pretty good down pattern here. So if gold starts to break that trend line, that probably means bonds could follow to the downside, which means rates could increase. If the rates are going to be upward pressure and the dollar, oh yeah, dollar's back strong. Dollar's picked up 25 pips against the euro, back to 109.28. So this is a little something has happened here, guys. Things are switching, the correlations are changing. It may not be the squeeze day. You see, this is why it's just so important to always be aware of what the different markets are doing and how they're reacting. Because right now, think about how many people are stuck long, shitting their pants, holding ES or NQ long, and they don't know that the 10-year note is breaking through potentially key support right now, which means rates are going up. The dollar's clawing back a lot against the euro. That's not an environment you want to be long the indices, right? Which is why we're not. So yeah, this is really interesting and fun to watch. All right, so with the 10 o'clock check coming up here, I would say, with the current condition on indices and what I'm seeing on the dollar and metals, right now, this is not a pullback for me to buy on stocks at all. If bonds were holding up and the euro was, hanging on to its gains against the dollar, that'd be a different story. But under the current circumstances, this is not a pullback that I want to buy on the indices. Let's check the NASDAQ just to kind of see what's going on here. If anything, if the NASDAQ, boy, it's tough, but if the NASDAQ gave me a close up in here, I don't know, I might short, but let's see where everything else is at. Let's see where the Dow is at. Yeah, look at the Dow, guys. Beautiful. Beautiful. Okay, that's the Dow. We can look at the Russell real quick, but not going to do anything else. So the key level, guys, heading into the 10 a.m. check here. Don't forget, we got crude oil inventory stocks at 10:30. We'll deal with that when we get to it. But right now, we're navigating, and see, this is why patience pays off. So far, just look at these charts. This is not easy for people to trade, and we're doing great. So the 10-year, this is going to be the key. Does the 10-year Oh yeah, this is I'll tell you what, guys, we got weekly VWAP. If the 10-year closes at 112 right in here, if it sucks up and gives us a nice close up here, you know, then I think stocks should be okay, right? This is a key level right here, because this is going to determine if the 10-year is going to reverse to the downside and rates are going to get, you know, upward pressure again. Stock market's not going to like that. So if the euro can kind of stabilize against the dollar and the 10-year can suck back up here about 112, then the question is, would I want to long stocks or would I want to long bonds? I think I would long bonds in that case. But let me just see. Look at the ultra bond. Got a lot of support potentially here as well. Let's look at gold, just to kind of get a, yeah, gold. Yeah, see, this is, if gold's breaking through there, 2028, you want these markets to agree. So that's going to be a fly in the ointment for stocks and long bond. Silver, potentially, you know, decent little reversal here. This is interesting. I'm happy to be flat so far and just waiting for stuff to develop. Okay, copper. This is, I mean, copper's got a big exhaust up here. Let's look at platinum. Just taking my sweet time, you guys, because when things change this fast after announcement, you have to see the correlations and what everything is doing and get a sense of, okay, what's the playbook now? Because we had a risk on playbook coming into the day, but the scoreboard has now changed dramatically after the Bank of Canada rate decision and the PMI flash. I have to dig down into that number later. There's platinum. Not going to be buying that. Yeah, exactly. They're falling quite nicely, Steve. So let's see. NASDAQ, this is choppy. I don't think I can I'd short that against that, but I think that the 4-hourly could end up back there. So I think the NASDAQ is maybe setting up for a short here. 10-year is still at 111.10. Just tough to short against this strength here, which is why I'm, you know, debating. Dollar still 109.30, the euro. But silver's off the highs quite a lot. Gold's tanking. The market doesn't like, the rest of the market doesn't like this number, whatever came out. So, you know, it might be interesting to trade the NASDAQ, but we're going to have to see. I think there's a lot of resistance up here. A lot. Just thinking, you guys. All right. Let me just check this real quick. So we've got, you gotta realize when you're doing this live and you're streaming, there's just so many damn things to keep track of with the live stream and just all this stuff. So yeah, the rates at 111.10, gold 2024, silver 76. You know, I think the NASDAQ is a potential short up here. I'll let you know if I take it or not. When's this gonna close here? I certainly wouldn't be long the NASDAQ right now. The weird light outside. And I'm just giving you guys a little hesitation because I'm gonna have to reboot my system here in a second because for some reason everything is very, very slow on my end. So I have to reboot, and I want to leave you with some information at 10. So yeah, I mean, I would look to short here anywhere in this 670 to 680 level on the NASDAQ, and, you know, stop it above those highs. Because we've got, I don't know, about 30 seconds left. My system is very slow right now, so that's why I'm everything is just kind of very, very slow. I've got to reboot. But NASDAQ, the bonds are tanking, rates are rising, dollars clawing back a lot against the euro. Metals are signaling they didn't like this number. So I'd like to see the NASDAQ close up here at like 680 and try and get short. So I'm going to leave you guys with that, okay? And then I'm going to come right back. But just keep an eye on this resistance level up in here. I got to reboot my system, and then I will come back. So there's the close. The volume pro, I mean, you got a lot of resistance up in there, so I think the NASDAQ's probably going to drop here. I've got to reboot some stuff, you guys. So I'll be right back. But you've got my analysis heading into the 10 o'clock hour. This is the key resistance level right here. So aggressive traders, you know, you can short here and put on more here. 17,680. I'd be looking to get short at 17,680, but unfortunately I can't do it right now because my system is, you know, very overheated. But we have to keep an eye on, let me just check the bonds real quick before I leave you. This is kind of, and if this does continue to happen, then I will have to buy. Well, scratch that, you guys. Be careful short. Look at bonds. We held that support right there. So that's, it doesn't mean stocks won't drop. It just means it's more risky of a trade. So I would not short the NASDAQ. I'm saying that very carefully. And I'm not saying it's going to drop. I wouldn't be short or long. You've got a lot of mixed signals right now. The NASDAQ is dropping. So if you did short there, you know, you could, you know, put your stop to break even or whatever. You got a free one. Do what you want. Definitely it's more likely to go down than up, but I didn't take it, being very clear about that. I'm not taking it because my system is fucking frozen, but also because the 10-year here, you know, with OMA, you got, look at all this here. That's a lot of support on the hourly, a lot of support on the 4-hourly, and a lot of support on the daily for the 10-year, which means if rates are going to stabilize here, which to me it looks like they could, you may not get that much out of this drop out of the NASDAQ. And I like to take the NASDAQ short when I see that rates have a good chance to continue to go up and the dollar is going to continue to get strong. I'm not seeing that right now. So I'm going to leave you guys with that for now. I got to go and reboot my system. I will come back and try and do some streaming here. My system's not too hot, or I might just have to run out and get a super duper desktop today because I can't have this continue to do this. It's only done it the last couple of days. So I'll leave you with that. I'm going to be, is your TradeStation data slow? Yeah, I think I don't even think it's my system, to be honest, guys. I think there's something going on with data sometimes because TradeStation will be a little slow. Sierra was super slow. Sometimes some of the different DOMs I have open will get slow. So I think it's the data that's doing something. But I'm just going to close it down now. You've got my analysis. It was good analysis. I think, you know, tricky market conditions, navigate them, you know, carefully. If I can come back and stream later, I will. Otherwise, I'll see if I can get it ready for crude oil so we can trade that number, but don't count on it. If I come back, you'll see that I'm streaming, okay? Because I got to figure out why everything's just so slow. I don't know if it's the data or what's going on. All right, thanks, everybody. It was a great day. A lot of good analysis. I didn't take a trade yet. I'd like to take a trade, but, you know, right now, looking at the scoreboard, you know, good day to be flat. Just the correlations are shifting around. So you want to take the trades when everything is on the same side of the equation, which at the start of the day we had risk on. We may not have that right now. We're at some key levels here. You know, if the 10-year starts to break through the support level, it's going to be a big break of support because it's so strong it shouldn't break. We don't know yet if it's going to break, but if it's going to break, look out below for stocks. Yeah, this is interesting. Okay, so probably you guys haven't checked the NASDAQ, but if you shorted up there, you're probably doing pretty good. It's hard to say whether or not I would have. My system's just frozen and I couldn't. So anyways, okay. I will be back maybe for crude oil. If not, tomorrow for sure. Take care. Good luck. And I wish everybody, a good day trading.